Hello, everyone. Good morning to you. And how are you doing today? I hope you had a wonderful weekend. Let's confirm we are all on the same page. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get the session started. Okay, I want to see some response in the form of hi. All right. Oh, Carrie, good morning to you. Thank you very much for that confirmation. Okay, Lucica Banzano. All right. Hi, how are you? Good morning. Mohamed Zmodu. Hope I got that pronunciation correctly. Good morning to you. All right. Okay. Glevis Tony. Dre. All right. Okay. I think this is okay for a confirmation. All right, so I want to welcome you all to yet another promising session of Extreme Speed Live, hosted by myself, Sharif Daramola. And as usual, I will be taking you on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. Well, today is the first day of the week, and as usual, we are going to be taking random pairs. I have an array of pairs we are going to be looking at this morning. After which, we are going to be taking the one that most suits our expectation for the week, as price action is being monitored. And also, if you have any pair you want us to look at, it could be a pair, a commodity, or a cryptocurrency, whatsoever it is, you can feel free to drop it in the comment section and I will try as much as possible to inculcate it into my plans for today. So with that being said, let's dive into the chart and let's see what is going on at this point in the market. Okay, I think I have Innocent Babe in the house. Good morning to you, Innocent Babe. How are you doing? Trust you had a good weekend. Then we have Terry61. Hi, how are you? Then we have Ask Owan Ngoshe. All right. Okay, I guess you can wait to listen to gold analysis. All right. Okay. Bitman wants us to do Dogecoin, and okay, we'll try to inculcate that. So I'll pen that down in a minute. So um USD. So that's on Bitman. All right. Okay, glad to hear you are doing well, innocent babe. Well, I was a very wonderful weekend for me. All right, so let's dive into the chart and let's see what is happening at this point. So the first pair we are going to be looking at today is going to be the US oil as usual. And what is happening on the US oil? Well, let's quickly run through what is happening on the higher time frame, after which we are going to be looking at how we are going to be taking advantage of any potential opportunity on this commodity. So as at last week, we remember we had the scenario last week where we took advantage of this move to the downside. We were able to take about, let's see, how many pips was that? We took it right from this area, right? Right back into the $86 level. And that was a minimum of 520 pips. And remember, we had multiple positions on this one, so we made quite um, double or triple of what that space is. So now, going into the new week, we hope to take advantage of another opportunity as we look at what is really happening here from a technical standpoint. Well, if you look at the current structure we have for the daily time frame, it's obvious that price action has been on a very strong bullish momentum since the beginning of the year. And as a result of this, we were able to connect a series of lower highs here to give us that resultant bullish trend line. However, if we look at the current structure since the month of June, we can see that price collapsed right back into the bullish trend line after finding lower lows and lower highs. And as a result of this lower lows and lower highs, we had this bearish trend line that we were using as our yardstick for in the last couple of weeks now. Now, zooming into the structure, we also have the $86 level, which is one of the major significant structure that we want to be using. In fact, we have been using this level in the last couple of months now. And if you look at how price action has been relating to that area, we can see that at every point in time, price action comes around the $86 area. It either becomes a buying niche, or if it breaks down that structure, we can see it became a selling niche at one point in the month of September. And during the course of the month of September, price was trading right below the $86 level. And at the beginning of this month, we started seeing bullish momentum, which took price right back at the top of the bullish trend line. And at the same time, the bullish trend line, sorry, the the bullish momentum also broke out of the bearish trend line that we identified earlier, break out of the key level to give us a bullish signal at this point. And the move that happened last week appears to be the retracement of that impulsive move. And whenever we have a breakout of structure like this, we expect that price is likely going to come back and do a retest of that structure before we start looking out for patterns on lower time frame that will be supporting a trend continuation to the upside. So because of this, the first thing we did here is to remember we took advantage of this move last week, and we don't know how far this retracement move is going to go. Is it going to go as far as retesting the structure, or probably respect the key level at the $86 level as usual to push price to the upside? So these are the scenarios we are not really sure of during the course of last week's trading session. And as we head into the New York session today, what I'll be advising us to do at this point is to take into consideration this impulsive move, after which we want to be looking at price action coming back into the golden zone area, which appears to be between the 50 and the 78.6% of that impulse leg. So what we are going to be doing right now is to bring out our Fibonacci retracement tool, run it through that previous impulse leg here, and what do we have? So we are going to be having somewhere around the 50 and the 78.6% of that previous impulse leg, which falls around this area. So that is one. Then the other impulse leg we have here is this one around this area, right from this point into this impulse leg. So we have somewhere right into the 78.6, that's like the $80 mark area. So we already have a buy zone at this point. So what this simply tells us is that if price continued to reject the $86 level, that is, we start seeing multiple rejection around this area, then we want to be looking for buying opportunity. However, if price breaks right below that key level, that is the $86 area, then a retest of structure might send price right within this buy zone area. We don't know how far that move is going to go, but if we see a breakdown retest of the key level, we want to be selling the US oil and then wait and see if we are going to be having a reversal pattern within this area. Then a breakout retest of structure on lower time frame will be supporting a trend continuation to the upside. So these are the scenarios we want to be looking forward to during the new week. So let's scale down to the lower time frame, that is the 1 hour time frame, and let's see how participants in this market has been relating to this most significant key level area at the $86 level since the beginning of the week. So we want to scale down to the 1 hour time frame to see things more clearly. So on the 1 hour time frame, this is what we have here. On the 1 hour time frame, we begin to see that at the beginning of the week, price started around right below the $86 level at exactly the $85.50 area, and price has been consolidating right within the $85.50 area and the $86.50 area. That was tongue twisted for me. Okay, so we have the scenario here. Let me give you a visual representation of what I'm talking about here. So we have this consolidation phase right now. So price is caught within this channel, and what we want to be looking forward to at this point is to remain patient to see how price is going to relate with this channel. So we have the channel right within the $85.50 and the $86.50 area. So we are going to be looking forward to a signal which is likely going to come in the form of either a breakout of the structure to the upside, or we're going to be having a breakdown to the downside here. So if a breakout to the upside happens, then we want to be seeing that as probably this is going to be the incitation of the second wave of the bullish momentum that started 2 weeks ago. But if we cite a breakout of that structure, remember we are not getting too excited, as we want to wait for further confirmations to happen, which is likely going to come in the form of a retest of that structure on lower time frame, after which we look out for patterns to join the rally to the upside. So that is the scenario we are looking forward to if we are going to be buying the US oil. However, if a breakdown of this channel happens, that is, price breaks down this channel in such a way that we see an engulfing candle taking us right out of the channel, then we want to wait for price action to give us a confirmation, which is likely going to come in the form of a retest of this channel, or probably the key level here, after which we look out for patterns on lower time frame to join the decline to the downside. But one thing I will say here is that even as soon as price breaks down that structure and does a retest and we are joining the bearish momentum, I will be advising that we move our stop loss accordingly as price action trend to the downside here. Remember, we have this bullish momentum that started a couple of weeks ago, and you will remember that I told you that the OPEC Plus had a meeting 2 weeks ago where they decided to cut oil production, and definitely when production is cut like this, we expect that the demand is going to be high, and when the demand is high, definitely price is going to increase. And we have been seeing the traces of that, the reflection of that event, as we saw this impulsive move. And like I said last week, I said this retracement is more or less going to be something like a quick sell, quick profit taking from those who took advantage of this move right from this area. So this retracement, we don't know how far it's going to go. So that's why I said if we have a breakdown retest of this channel, we want to be moving our stop loss to protect our position, as remember we are still within the buy zone area that I identified on the higher time frame. So anything could happen around this area. We could have a situation, remember this green line is the bullish trend line we identified on the higher time frame. We could see multiple rejection of this level to push price to the upside, or probably price comes back into the structure that was broken a couple of weeks ago to send price go to the upside here. So these are the scenarios we are going to be looking forward to. So at this point in time, I'm advising us to remain patient. Let's see how price action is going to relate to this channel. So the only thing we are going to be waiting for around this area, remember, it's around that $86 level, the most important key level that has been our guide in the last couple of months now. So if a breakout of that structure happen, we want to see that as a bullish signal, after which a retest to structure give us a confirmation to join the rally to the upside. Then if a breakdown happens, then we want to be looking forward to retest of structure to sell the US oil. And while we sell, we want to protect our position accordingly. We move our stop loss accordingly so that we don't get caught out when the bullish momentum, the second phase of the bullish momentum, begins. So this is what we are looking forward to on the US oil. If you have any question whatsoever, feel free to drop in your inquiries in the comment section, and I will be taking the next 10 to 15 seconds to read through the chat to see if there are any questions in that regard. So what do we have in the comment section? All right. Okay, 19125, good morning to you. 11181, good morning. Okay. All right. Oh, 359, good morning to you. Tron 488, good morning. Dino, good morning. Lucica wants us to treat Euro USD and JPY. Let's see if we could do Euro USD, okay? Lucica. Okay. All right. Okay. In the absence of no question, I guess we move on to the next pair. So the next pair we are going to be treating as usual is going to be the US tech. So what's happening on the US tech? Let's quickly take a look at what is happening. I already have a buy position running already on the US tech, and let's see how I got to this point of making that informed decision to buy the US tech at the beginning of the week. Well, if we look at what is happening on the daily time frame, we can see that price action has been on a very strong bearish momentum since the beginning of the year. And as a result of this, we were able to connect the series of lower highs here to give us that resultant bearish trend line. And since we had that bearish trend line here, we can see that as at the month of June, we saw that this level around the 11,000 area held price action supported for a while. So we saw that as soon as price got into the $11,000 level, we saw this bullish momentum right from this area, giving us a clue that buyers are at this point. So price came back again in the month of September, stroke the month of October, to lay emphasis on how strong the buyers are at this point. So and the last 3 weeks now, we've been expecting that we're going to be having a bullish momentum from this area, but that did not happen as we saw a breakdown of that structure. I'm sorry for that breaking transmission. Sorry. Um, I had some issues here I had to resolve. I'm sorry about that. Okay, so where are we at this point? So we saw this little breakdown of the demand zone during the course of last week. I think the last couple of weeks now, we have seen our price broke down the structure. Though we took advantage of a bearish move around this area, but we didn't really have too much profit here as we were taking out at our break-even level. And since price is right within that buy zone, we want to be seeing how price action is going to be relating to the structure around here. So one thing I normally when we see a breakdown of structure like this, we expect that a retest of structure will be sending price to the downside. But one thing that called my attention here is simply this sharp rejection of this area. So we had this candle closing in an hammer candle during the later part of last week trading session, giving us a clue that there is buying pressure. There are traces of buying pressure around this area. So because of this, we want to still be very mindful of taking any sell momentum here. As for us to sell right around this area, we want to be seeing a significant bearish candle pushing price, a bearish engulfing candle pushing price right to the downside. Then definitely after a retest of structure, we want to be joining the decline. But because of what we saw here, the sharp rejection of this area, I want to be tending towards a possible bullish momentum happening in the course of the week. So what we want to be doing during this live session here is to watch and see how price action is going to be relating to the structure. We want to see how participants are related to the structure at the beginning of this week, and we want to be using whatever we find here to determine how we want to be trading the US tech for this week. So in order to do that, what we're going to be doing here is to scale down to the lower time frame, that is a 1 hour time frame, and let's see how participants in this market has been relating to that structure I shared with you on the higher time frame. Now look at what happened here on the 1 hour time frame. We had a scenario here where price action was caught within a consolidation phase. We have we have this falling wedge. We had a demand zone last week. Price broke down that demand zone, which appears to be a false one, as price finally broke right above that bearish trend line to give us a possible bullish momentum at this point. And price breaking right above this area, it went to as far as the $11,200 area, which is exactly right above the demand zone we identified on the daily time frame. And from a technical standpoint, whenever we cite a breakout of a structure like this, what do we expect? Whenever we have a breakout of structure, we expect the price is likely going to come back and do a retest of structure, after which we want to be looking out for patterns on lower time frame that will be supporting a trend continuation to the upside. So what is happening around this area at the beginning of the week will now give us a decision, an informed decision on how to trade this. So where did price start this week? Price started this week at around the $10,600 level. Around this area, we saw this bullish engulfing candle taking price right back into the $10,750 level. So what this simply tells us is that the week started on a very strong bullish note as we saw this engulfing candle, and since this engulfing candle took price into the $10,750 area, we can see that price did not come back below that candle. So it's more or less a very strong bullish move here, and we can see after this engulfing candle, price was caught within a consolidation phase, trying to break right above the 10,750 level. So we can see that there was buying pressure around that area until I think 5 hours ago we saw that breakout of that level. So when I started seeing this what's it called, this buying pressure here, after that impulse, that engulfing candle, that engulfing bullish candle, after sighting this engulfing bullish candle, and I started seeing buying pressure around this area, I was looking, okay, fine, if price continue to relate right around this area, then definitely we want to see price break out of that roof. And that's exactly what happened during the early hours of today, as we saw a breakout retest to structure to give us a confirmation that price is going to the upside. So as a result of this, I took advantage of that buy opportunity right around the $10,750 area, and currently I'm in with about how many pips in profit now? About 90 pips in profit at this point in time. So if you are taking advantage of that move at the breakout retest of the structure, kudos to you for being on standby to take advantage of such. However, if you are not yet in this trade, well, let's see how we could actually take advantage of this move as we head into the New York session. Well, the first thing we observe here on the 1 hour time frame is that this is the lowest point price has gotten to in the last 2 weeks. That's the lowest point, and the next low point here is a higher low at around the $10,600 level. So what we want to be doing here is to connect the series of lower higher lows here to give us a resultant, probably a temporary bullish trend line that will be guiding our action for this week. So we have our line chart brought out, then we connect the series of lower highs here, and what do we have? Let me make this one, and then we have something like this. Let's extend this out a little bit. So we have a temporary bullish trend line that will be guiding our actions going forward. So we want to see this bullish trend line to continue to guide our action, as if price comes back into this bullish trend line in such a way that we have multiple rejection of this level. And if you are already in this trade, you want to add one more position to your trade at the breakout retest of structure on lower time frame. And if you are not in this trade, this is an avenue to join the rally to the upside. So that is the first parameter we are going to be using as our yardstick for this week. Then the second parameter we are going to be looking forward to is the breakout of the $10,750 level, which is more or less a psychological level considering the round figure of that price. So we want to be using that level as our yardstick also for this week. That is the $10,750 area. So I will be drawing that line out. So for the sake of clarity, let's label this. So we have the $10,750 area. So we want to see price continue right above this level. So anywhere below this level might be tending towards a bearish momentum. So if at any point in time price comes into either the bullish trend line or probably this $10,750 level, and we start seeing multiple rejection or buying pressure from that area, then we want to be looking out for patterns on lower time frame to join the rally to the upside. So this is how we want to be trading the US tech. So as long as price continue to oscillate right above the $10,750 level, we want to be buying the US tech. So this is how we intend to trade this. And if at any point in time we cite a breakdown of that bullish trend line, which also lines up with the breakdown of the $10,750 level, we want to be seeing this as a bearish signal. But remember, we are not getting too excited, as we want to wait for confirmations to happen in the form of a retest of that bullish trend line, or probably the $10,750 level, after which we look out for patterns on lower time frame to join the decline to the downside. So this is how we want to be trading the US tech for this week. So let's get ourselves prepared, as I was able to identify the possible scenarios that is likely going to be happening for this week. So we don't want to get ourselves too confused whenever we start seeing the signals. So if you have any question regarding what I've just explained so far, feel free to drop in your inquiries, and I will be looking at my comment section from time to time to see if there are any questions. So in that regard, let's move on to the next pair. I want to make sure that we cover as many pairs as possible before my time lapse. So let's go on to the next pair here. And the next pair we are going to be looking at is the XAUUSD, which is the gold. And on the gold, remember, we have been enjoying a bearish momentum on the gold for throughout the course of last week trading session, as price continued to trade right below the most important key level here on the gold, that is the $1,680 level. So we saw since last week how that level, since price broke down that level, price as sellers have continued to reject any bullish potential from that area. So we can see how price has continued to reject the $1,680 level, and at the same time we also had this bearish trend line that has been guiding our action through last week. So we had a situation where price continued to reject that bearish trend line. So we continue to have lower highs and lower lows. But one thing that caught my attention here is this demand zone at around the $1,645 level, which has been rejecting any selling pressure around this area. So we can see we had the first one during the later part of last week's trading session, and the second one happened during the early hours of this week. So what this simply is telling us that there is a buy pressure going on right around the $1,645 level, which is likely going to be pushing price to the upside, or probably coming back into the bearish trend line, or probably the key level at the $1,680 area. So let's quickly look at what is happening on the higher time frame. Then we come back here to make a decision. Yeah. So on the daily time frame, well, the first thing we observed on the daily time frame was that price action has been on a bearish tone since the beginning of the year, and as a result of that, we were able to identify this bearish trend line after connecting the series of lower highs. However, 2 weeks ago, is it 2 or 3 weeks ago, we saw this bullish potential which broke out of the $1,680 level, though price came back into the bearish trend line to incite another wave of bearish momentum. But if we notice what has been happening in the later part of last week trading session, I think the last 2 days of the last week trading session, we saw how this level at the $1,645 area has been rejecting all selling pressure. So it appears that buyers are coming in at this point, and this might likely be the end of the retracement of this impulse leg that we've identified here, and we might be seeing a situation where reversal pattern is evolved into to send price to break out of that bearish trend line. We cannot ignore the fact that a bullish momentum can be coming in right at this area, despite the fact that we are on a very strong bearish momentum. So if you remember vividly what we talked about on this one, after taking into consideration this impulsive move, we were able to bring out our Fibonacci retracement tool, run it through that impulse leg, and we actually identified the golden zone area as our take profit target for the selling position we took last week. So we had somewhere between the 618 and the 786 as our take profit target. And if you notice what has been happening here, you will notice that since the later part of last week, buyers have continued to reject all selling momentum at that point. So because of this, we want to be very careful of continuing our sell momentum at this point. Hold on a second. Let me okay, so we want to be mindful of joining any decline around this area. So what I want us to do at this point as we head into the New York session today is to identify what is really going on around this area. And the only way we can do that is to scale down to the 1 hour time frame after things will become more clearer. So scaling down to the 1 hour time frame, we want to see what is really going on around here to make a decision based on the technical structure we're going to be identifying there. So when we scale down to the 1 hour time frame, what did we notice? So this is the 1 hour time frame right now. And the first thing we observe here is the multiple rejection of the $1,645 level. And as a result of this, I was able to identify that area as a temporary demand zone. And also to make our job easier for this week, we will be using the 1,645 level as a yardstick for any trading opportunity for this week. So what simply does for us is that if price continue to trade right above the $1,645 area, we want to be looking for buying opportunity. And if price breaks down the $1,645 level, then we want to be looking for a trend continuation to the downside. That is, price continue in the trend that it began a couple of weeks ago. So that is what we are looking forward to. And now look at how the price started this week. Price started the week at around the $1,645 level. And since price started that area, we can see the demand for gold continue to increase. So we saw price move into the $1,650 area, rejected it a couple of times, come back to do a retest of structure. And what did we see? We saw this bullish move right into the $1,660 level. So as a result of the retest of the structure, I joined the rally from this area at the $1,650 level, and price has continued to the upside from that area. However, considering the fact that we are on a long-term bearish momentum at this point, we want to be moving our stop loss accordingly to protect our position against any sudden pullback that is likely going to be happen. It is not until after price breaks out of the $1,660 level that we want to be a little bit confident with our buy position, as anything around this area still has a tendency of going to the downside. So it's not until we have a breakout of the $1,660 area that we will be very confident in our buy position at this point. So if you are not joined this trade at this point, well, we want to continue to look for buying opportunity around this area. Let's see if price is going to do a retest of this $1,650 area. Then we want to be looking for another opportunity to join or probably add one more position if you are already in this trade. And if a breakout of the $1,660 level happens, you know what we are going to be doing. We want to be adding more position at a retest of the structure as price continue to the upside. So our take profit target on the XAUUSD is going to be around the very important key level we have identified at the $1,680 area, at least for the meantime. Let's see how price action is going to relate to the structure. Remember, the $1,680 level also shares a confluence with that bearish trend line we identified on the daily time frame. So we don't know how price action is going to relate to that structure. We might be having multiple rejection. That is, price might respect that bearish trend line one more time to push price to the downside, or we could be having a breakout of that structure that will be inciting a further trend continuation to the upside. But till then, let's have our take profit target around this area in the meantime, and that will be dovetailing to about 3,500 pips thereabout. Now, with that being said, what is the other scenario? What is the other possible scenario that is likely going to be happening within the zone? Well, considering the fact that price has been on a long-term bearish momentum, we cannot ignore the fact that sellers will still come in and push price to the downside. So because of this, what I will be doing here is to see that price breaks down the $1,645 level. I want to see this bearish move to the downside here before I start thinking of selling the XAUUSD. And if a breakdown of that structure happens, then we want to be patient enough to see a retest of structure, and then we look out for patterns on lower time frame to join the decline to the downside. So like I said, I will not be selling this GBPUSD unless I see that price takes out all the buy position that is here. So we have a lot of buy position here with a lot of stop loss from buyers around right below the structure. So I want to see price take out all those positions there. Then that will likely be a bearish signal for me. But remember, we are not getting too excited when we cite such a signal, as we want to wait for confirmations, which is likely going to come in the form of a retest of the structure before we want to be joining the decline to the downside. But if a breakdown of the 1645 does not happen, we continue to remain in our bullish bias as we monitor price action in the next 24 hours. So this is what we are going to be looking forward to on the XAUUSD. If you have any questions, I hope Innocent Babe is still in the house. If you have any questions regarding what I've just discussed so far, feel free to drop in your inquiries in the comment section, and be rest assured that I will try to shed more light and make it easier for you to understand. All right, Innocent Babe, hope there are no questions. Good morning, Fat12, Sergio. Okay, good morning to you all. All right, Leo, Edwin. Okay. All right. So, um, in the absence of no questions, I guess we'll just move on to the next pair. Let's see. So, what's the next pair we are going to be treating at this point? So the next pair we are going to be looking at is the GBPUSD. And what is happening on the GBPUSD? I think we begin to see selling momentum right now. But before I go into the details on this one, let's run through what our expectations were last week and how we took advantage of this trade. Well, remember last week we took advantage of this trade right below the 1.1300 level, as we saw a breakdown of the neckline area, retest of structure, and we took this move right into the neckline of the 1.1500 area, which gave us about 850 pips thereabout. And as the beginning of the week, we saw our price started on a bullish note. So we had this bullish gap here. That is, during the course of the weekend, we saw that institutional trading happen, and they tended towards a bullish momentum for this week on the GBPUSD. So we saw the breakout. We saw a bullish gap around this area, which is also right above the 1.11500 level. So to make things easier for us to understand, let's quickly go to the daily time frame. Let's see how we got to this point, and then we will be making an informed decision afterwards. So on the daily time frame, we observe this, that price has been on a strong bearish momentum. Hold on a second, let me make this a little bit smaller so that it doesn't take too much space on our, hold on, let me, okay, so we have something like this. So this is what we have here on the daily time frame. On the daily time frame, we can see that we are on a very strong bearish momentum since the beginning of the year. But the most important structure I want to share with you is not the bearish trend line, but the key level at the 1.1400 level. And what is that? Look at what happened here on the month of September. This level was at one point in time a buying niche for participants in this market. We can see for close to 3 weeks, every time price comes within the 1.1400 level, we saw buying pressure from that area. And something interesting happened during the later part of the month of September, as we saw a significant breakdown of the 1.1400 level to push price to the 1.0400 area. And from a technical standpoint like this, whenever we cite a breakdown or breakout of structure, we expect that price is likely going to come back and do a retest of structure. And that's exactly what happened here, as we saw the move right back into the 1.1400 level a couple of weeks ago. Multiple rejection that sent price to the downside here. Now, with this information we have here, there is another structure I would like to share with you on the 4 hours time frame, which supported a bullish momentum from this area. And if we scale down to the 4 hours time frame, look at what we have here. We have this reversal pattern following the breakdown of that structure here. So we have this reversal pattern, and whenever we have a reversal pattern like this, we definitely want to be having our neckline identified, as this is going to be our yardstick for trading opportunities in the future. And what happened afterward was a breakout of that structure. We saw the breakout of the neckline, which was identified at the 1.0900 level, where price came back into the 1.1400 level, which is the significant level I showed you on the daily time frame, and price has come back to do a retest of that neckline. And since price retested that neckline, price has been climbing to the upside from this area. So this is now giving us a possible situation where buyers still have a say in this market. But one thing I want to call our attention to here is this: despite the fact that we have a neckline here, and from a technical standpoint, we expect that price will respect that trend, respects that neckline to the upside. We cannot ignore how this 1.1400 level has been a strong selling niche for participants in this market. As we can see, every attempt by buyers to push price right above the 1.1400 level has been met with stiff resistance from the sellers. And even despite the fact that we saw this impulsive move right out of the neckline area here, we can see that price was unable to climb as high as the previous high. So we have the previous high here. Price was unable to climb as far as the previous high, as we saw reversal patterns here on lower time frame that sent price to the downside here. So right now it looks a little bit ambiguous that, okay, fine, what are we going to be doing at this point? Well, it's quite easy. What we just want to be doing right now is to see what is really happening around the structure here, and let's see what's happening on the 1 hour time frame, and we use the structure we identified there to make an informed decision. So if we look at the current structure we have here, finding this as a lower high, definitely we want to be looking forward to bearish momentum from this area. That's from a technical standpoint. But because price rejected the neckline area here, we cannot ignore the fact that buyers could actually come in to take price right out of the 1.1400 level. So let's scale down to the 1 hour time frame and let's see what is happening there. Then we can make a decision at that point. So look at what is happening on the 1 hour time frame here. Price started with a bullish gap. We had a bullish gap here, and since price started the week, it started at around the 1.1200 level. It started here, and it was caught within a consolidation phase right within the 1.12580 and the 1.1200 area. So this is what we had at the beginning of this week. We had the situation where price was caught within this channel, and what we observed was a breakout of that structure. So with the breakout of that structure coupled with this bullish gap here, I was thinking of a bullish momentum at this point. And so because of this, after citing the retest of structure, I joined the potential rally as a retest of the 1.12500 area. And in addition to the structure we have here, the next thing I did was to connect the series of lower highs here. Look at what has been happening since last week. We saw our price has continued to find higher lows, and we can see the situation here, which resulted in the bullish gap. So connecting those series of lower highs here, sorry, higher lows, we had this temporary bullish trend line, which I'm going to be using as my yardstick for this week. So what does this tell us right now? So we have a bullish trend line. So if price continues to respect this bullish trend line to the upside, I want to be looking forward to buying opportunity on the GBPUSD. However, if at any point in time a breakdown of this bullish trend line happens in such a way that price breaks down that channel that is starting the week with, then a retest of the structure would be giving us an opportunity to join the decline to probably the neckline around this area. So let's see how price action is going to play out at this point. Right now, price is coming back into my entry zone, so it's likely I'm going to be taking out at my break even at any point in time right now. So let's see how this candle is going to close. Is this candle going to break down the bullish trend line here to give us a bearish signal, after which a retest of structure will be giving us a confirmation to join the decline to the downside? Or are we going to be having a situation where price breaks right above the neckline area at the 1.1300 level, where a retest of structure, which also lines up with the bullish trend line, will be sending price to the upside? So this is how I intend to look at the GBPUSD for this week. So for those who are not part of the GBPUSD, I told you I took advantage of the move right around this area. So if you are not part of that trade, well, if price continues to the upside, that is breaks above the 1.130 level, then that's a bullish signal. And if we have buying pressure from this area after retesting the structure, then you want to be joining the rally to the upside. And if you're already in this trade, you want to be adding more position to your existing trade as price action retests this area and pushes price to the upside. So in the meantime, I'm having my take profit target somewhere around the 1.14 area. Remember how this level has been a major determinant for selling niche in this market, which I showed you on the higher time frame. So we want to see how price is going to relate to that structure, and if we have a breakout of that structure, then we want to be seeing that as a bullish signal. But remember, we are not getting too excited when we sight bullish signal like this, as we want to wait for confirmations to happen in the form of a retest of that structure before we want to be adding more position to our existing trade. So that is that on the GBPUSD, and I hope we get ourselves prepared to take advantage of this move when it finally happens. So moving on, we're going to be talking about the USDJPY. I'm not sure I'm going to be talking about the silver this week, as I need to attend to Bitman and Dosika, who wants us to do EURUSD and DOGEUSD. So on the USDJPY, it has been a very profitable trade for us since last week, and we are still on this trade as at the end of last week. Remember, we told you that we are going to continue to extend our TP accordingly as price action moves in our favor. So currently with our first position, we are running with about 320 pips, and our second position right from the 147 area is running with about 190 pips at this point in time. So how did we get to this point, and how are we going to be trading the USDJPY for this week? In order to do that, let's scale up to the daily time frame where we want to see what is really happening in this market. So on the daily time frame here, we can see that it is obvious that price action has been on a bullish momentum since the beginning of the year, and as a result of this, we had this bullish trend line that has been holding price action supported for quite a while. But since the breakout of that bullish trend line, which also has a neckline around the 135 Japanese yen in the month of August, price is yet to come back into that bullish trend line. However, something interesting happened within the month of September stroke the early days of this month, as we saw that as soon as price got into the 145 Japanese yen area, we started seeing selling pressure from that area, which culminated in the sharp move we saw here after the Bank of Japan intervened in the FX market to try to support the Japanese yen devaluation. But I think that did not hold. So we saw multiple rejection of this area from the sellers, and we were thinking that this move was going to send price right back into that bullish trend line for another wave of a bullish momentum. But that did not happen, as we saw a breakout of that channel. So let me show you how that breakout happened during the last week trading session. So on the 4 hours time frame, look at what happened here on the 4 hours time frame. So for 3 good weeks, we had this consolidation phase running. So we had this consolidation phase running where price continued to oscillate right within the 145 and the 144 area. And for 2 weeks, we were waiting for a signal to happen in the form of either a breakout of this channel or a breakdown of this channel. So we're expecting either a breakdown of the channel to give us a signal of a trend continuation to the downside, or probably a bullish signal in the form of a breakout retest of that structure to send price to the upside. And that is exactly what happened for us last week, as we saw price was caught within a channel since the beginning of last week trading session around this area. Then we cited the breakout of this channel, retest of structure, and boom, we joined the rally to the upside. So that is how we got into this point in the market. And as a result of that, we identified this bullish trend line last week. Remember, after connecting the series of higher lows here to give us this bullish trend line, and we were using that bullish trend line as our yardstick, but price did not come back into that bullish trend line at any point in time. So what we want to be doing right now, remember, as at last week I told you that we should extend our TP accordingly as soon as price gets into a certain level. And what we have here, it seems that the bullish momentum is still very strong on the USDJPY. So let's really see what has been happening since the beginning of the week. As soon as price goes into the 149 area, let's see what is happening, if this bullish momentum will continue for this week, or are we going to be having a retracement phase that will be leading price into the bullish trend line here before the second wave will happen, or probably lead into this trend line, this second trend line here before another wave of a bullish momentum will happen. So let's scale down to the 1 hour time frame and let's see things more clearly. So on the 1 hour time frame, the first thing we observed at the beginning of the week was that price was caught within a consolidation phase right within the 148.400 level and the 148.800 area since the beginning of the week. So we had a consolidation phase since the beginning of the week, hereby emphasizing the indecision that is within this market. And for this week, we really don't have any major event on the economic calendar that is likely going to be a catalyst for the USD. So at this point, we are going to be leaning on our technical skills to determine how we want to be trading this. So we have a consolidation phase right within this area. And what we're definitely going to be doing when we have a consolidation phase like this is that we want to be looking out for a signal to happen in the form of a breakout or a retest of that structure. So we have this level as our resistance level in the meantime. So we have something right here, the 148.850. So let's label this area 148.850. Am I correct? So we have 148.850. Let's place it at the right hand side of our screen. So we have that channel there. We have the resistance level there, and then we have the support level at the 148.450. Yeah. So we have the 1.8.450 area as our support level of the channel. So whenever we have a channel like this, we expect that price is either going to break out or break down that channel to give us a signal. So more or less, look at what we have here. We have an impulsive move since last week. So this is more or less turning out to be a bullish rectangular pattern. So, and from a bullish rectangular pattern is more or less a trend continuation pattern. So we want to see a breakout of the structure to give us a bullish signal, after which a retest of structure on lower time frame will be giving us confirmation to add more position to our existing trade. So at this point, we even want to extend our TP further into the 150 area, 150.5 area, and let's see how price is moving. So if you are still in this trade, the next thing you want to be doing is to move your stop loss to somewhere right below the 148.400 area, somewhere around here. Move our stop loss to somewhere around here, and let's see how price action is going to be relating to this channel as we continue to monitor price action during the New York session. However, if at any point in time price breaks down this channel, does a retest of that structure, we might have a situation where price will likely come back into this bullish trend line to send price to the upside, or it could come into this trend line here, which also lines up with the 147 Japanese yen level, after which we want to be looking for multiple rejection here, buying pressure probably to push price for another wave of a bullish momentum. So this is what we want to be looking for on the USDJPY for this week, and let's see how price action is going to relate to the structure, and then we will be using that to determine how we intend to trade this as we head into the new session. So if you have any questions regarding what I've just discussed so far, feel free to drop in your inquiries in the comment section. So let's quickly go in to see Lucica's pair, that is the EURUSD, and let's see what is happening on that pair. So on the EURUSD, what do we have going on here on this chart? So the first thing we want to be doing is to go to the daily time frame and let's see what is really happening on the EURUSD. Well, looking at the daily time frame here, we can see that price action has been on a very strong bearish momentum since the beginning of the year, and we have this bearish trend line drawn out. Then we have a couple of key levels that has been our yardstick for quite some time now. So we have the first important one here, which is the $1 level, and price broke down the $1 level during the later part of the month of September here, and which led into the lowest price the EURUSD has ever been, I think in the last 20 years now. That has been the lowest price it has been. So price has been trending below the $1 level since the later part of the month of September, giving us a clue of how strong the sellers are at this point in the market. So, and from a technical standpoint, whenever we cite a breakdown of structure, we expect that price is likely going to come back and do a retest of structure, which is exactly what happened during 2 weeks ago. We saw price reject the $1 level one more time to send price to the downside here. So now with the situation we have here, what is going to be our expectation as we head into the new week? Are we going to be having a situation where the trend continuation to the downside is going to be happening, or are we going to be having a move right back into the bearish trend line? Which also lines up with the key level at the $1 mark before we start looking for situation that will be sending price to the downside, or it could probably lead into the breakout of the $1 level where a retest to structure will give us a confirmation to join the rally to the upside. So these are the scenarios that are possible on the Euro USD, but I will be breaking things down a little further to make things easier for us to make a decision here. So the first thing we observe now in the last 2 weeks on this pair is that we have the lowest point here at the 0.95350 level. We have the lowest point, and the next low we had was around the $0.96800 level. So you can see we have a higher low at this point. So is this going to turn out to be a reversal pattern? So we had this impulsive move right from here. Price comes back into the $1 mark, and then we have a situation where price comes back, find a higher low, and then this might likely lead to the breakout retest of that structure to give us a massive bullish potential opportunity here. But in the meantime, what we want to be doing here is to identify this area as a demand zone in the meantime. So let me label this area a demand zone for now, as we can see that price and buyers have continued to put more pressure, taking away selling pressure that we have there. So let's label this area the demand zone for the meantime. I will be giving this a white color, and let's place this right inside the center of the box, and then we'll be painting this. Let's give this a dark color. So we have a demand zone here. So the next thing we want to be doing now is to see how participants in this market has been relating with this very important 0.97500 area since the beginning of the week, and we will be using whatever we find there to determine if we are going to be buying right above the 0.97500 area, at least for the meantime, with a take profit target somewhere around the bearish trend line, or are we going to be having a situation where we want to be selling and having this demand zone as our take profit target. So in order to do that, let's scale down to the 1 hour time frame where we begin to see things more clearly. So on the 1 hour time frame, right below the 0.97500 area that was identified on the daily time frame, we can see that price has been trading right below that level. Price started around here, around the 0.97200 area, and we have seen that we have been seeing multiple rejection of the 0.97500. So we have been seeing buy pressure trying to push price right above the 0.97500, but it had been met with stiff resistance from the sellers, as we can see selling pressure right around this area. So what this simply tells us is that there is a huge exchange of transaction between the buyers and sellers around this area. So we want to see how price action is going to relate to the structure. Are we going to be seeing price break out of that structure? And if it does, then we want to be looking at the retest to structure to join the rally to the upside. And if price continue to the downside, breaking down the structure here, then we might be seeing that as a signal for bearish momentum. So to make our job easier here, I will be identifying the support level of this channel here to make our job easier. So we have the 0.97200 area. So let's label that level for the sake of clarity. So we have the 0.97200. Am I right? Okay, so we have the 0.97200 area there. Let's place it at the bottom right hand side of our screen. So we have the 0.97 area. So we can see how this level also has been a major determinant of price action. Even if we go as far as last week, we can see how that level has been a major determinant of price action. So we have the 0.97200 area here. So since the beginning of the week, we have seen that price has been trading within this channel here. And for us for this week, we don't have any major event for the dollar. Let me see if we have any major event for the euro for this week. So let's bring out our economic calendar and see if the participants in this market are actually anticipating high priority event to make a decision here. So we really don't have anything on the euro too as well. So we're going to be relying on our uh, price action scales to determine how we are going to be trading this. So what we are going to be doing here is to wait for a signal, and if a breakout of the 0.97500 happens, a retest of structure should give us a confirmation to join the rally to the upside. And if a breakdown of the 0.97200 level happens, we don't get too excited. We wait for price to give us further confirmation in the form of a retest of structure, after which we look out for patterns on lower time frame that supports a trend continuation to the downside. And if that happens, I will be advising that we have our take profit target right around the demand zone that we have identified here, as we never can tell, this area could be a buying niche to push price to the upside. So we want to be very mindful of this as we head into the New York session. So that is that on the Euro USD. I hope I made myself clear. Is Lucica still in the house? If you are still in the house, kindly confirm that you understand what I just talked about there. And then let's see if I can do the Doge USD for Bitman. So Bitman said we should do, let's see. Okay. Okay, so we have the Dogecoin. So let's scale up to the daily time frame and let's see what is happening. Okay, Lucica, all right. Glad you're still around. Okay, so let's look at Dogecoin now. On the daily time frame, the first thing we will observe here is that price action has been within a consolidation phase in the last 3 to 4 months now. And as a result of the first thing I'll be doing here is to identify this demand zone here. So we have a demand zone here. Let's do this. Okay, so we have a demand zone sitting right around I'll be identifying that in a moment. So let's place this right inside I'll give this a yellow, and let me make this a little bigger. So we have a demand zone right around the $0.05. So we can see that since the month of June, every time price comes within this level, we have been seeing buying pressure from this area. So we've been caught within a consolidation phase since the month of June. We can see buying pressure right around this area, buying pressure, buying pressure. So and if we go as far back as the beginning of the year, we can see that the structure we have here is more or less a very strong bearish momentum here. And if we are thinking of selling the Dogecoin, what I'll be advising that we do here is to look out for a significant breakdown of this demand zone. So this demand zone has been a very strong buying niche for participants in this market. So we don't want to be selling somewhere around here, as we want to see a significant breakdown of the structure, which requires a lot of patience to see price break down that level, after which a retest of structure will be giving us a confirmation to join the decline. But I don't think that is going to be happening anytime soon anyway. So what we want to be looking forward to at this point, considering the fact that we have a very strong demand zone here, is to look forward to for buying pressure. So we want to scale down to lower time frame and see if we can identify anything that will be suggesting that we could be buying the Dogecoin right around this area. So let's scale down to the 1 hour time frame and let's see what is really going on in this market. So on the 1 hour time frame, what we observe here is this. We can see as at the beginning of I think during the course of during the later part of last week trading session, we saw this impulsive move right from this demand zone into the $0.06 level, and since then price has been caught within a consolidation phase here. So we can see we have a consolidation phase here after a bullish impulsive move to the upside. So what we want to be looking forward to at this point is a bullish momentum, and in order to do that, we want to identify this channel, and then let's use it as our yardstick to take advantage of that bullish momentum, considering the fact that we have this impulsive move to the upside right above that demand zone. So what I'll be doing here is to bring out my line chart, and let's connect the resistance point together. So we have somewhere around the 0.0590, I guess. So we have the 0.0590 area. So we'll be labeling this for the sake of clarity. So we have the 0.0590 level. Let me place this right at the top and right hand side of my screen. And okay, we have that. And then we have the support level of this channel somewhere around here, which is around 0.0580. Okay, so we have 0.0580. So this channel is going to be our yardstick. We're going to be using this channel to determine our trading for this week on the Dogecoin. So what we're going to be looking at is this. We have a channel already right within the 0.0590 and the 0.05800. And whenever we have a channel like this, what do we expect? We expect a signal in the form of a breakout or a breakdown of this channel. So a signal could either come in the form of a breakout of that channel, or it will come in form of a breakdown of that channel. And if we look at what has been happening here in the last couple of hours, we can see that we already have a breakout of this channel at the 0.0590 level. So what I'll be suggesting that we do here is that we wait for a significant breakout to happen. And remember, this is the highest point price has been since Friday. This is the last highest point at 0.059. So let me adjust this a little bit to take this point to as well. So let's adjust this a little bit to take this point. So we have it at let's see 0. It's close to 0.06. So let's give this 0.06. So we have it like that. So what we want to be saying is we can see that price is right at the resistance point of this channel. So we want to see a breakout, retest of the structure. Most importantly, look out for reversal patterns on lower time frame. Then we want to be joining the rally to the upside. So that's how we intend to buy the Dogecoin right from this current juncture in this market. However, if a breakdown of the 0.05580 happens, then a retest to structure should be giving us a confirmation to join the decline to the downside. So we will be having our take profit target right around the demand zone, at least in the meantime. And let's see how price action is going to relate to that current structure there. So that is that on the Dogecoin. I hope I made myself clear. Is Bitman still in the room? If you are still around, say holla at me and say you're here. And I hope you do understand what I just explained so far. I'm already 10 minutes out of my time, and let's run through and do a recap of what we talked about so far today before we call it a day. So the first pair we looked at today is the US oil, and on the US oil we had a scenario where we've identified a channel and we are still expecting a signal and confirmation to happen here. So we have price caught within the channel at the $86.50 area and the $85.50 level. So we have a situation like this right now. We're still expecting a signal to happen in the form of either a breakout, retest of structure, so we could join the rally to the upside, or we could be having a breakdown of that structure, after which a retest of that structure will be giving us a confirmation to join the decline to the downside. And remember, I said something here that if we are joining the decline to the downside, we want to be mindful of this position, as we want to be moving our stop loss accordingly as price action goes to the downside here. And the reason why I said that is simply because we are still within a very strong buy zone. We are still within a very strong key level at $86 level as well. If we scale up to the daily time frame, remember we had this buy zone identified here after taking into consideration this impulsive move, which appears to be a reflection of OPEC's decision to cut oil production. And we saw this move to the downside, which appears to be the retracement of that impulsive move. And definitely this retracement is more or less a sign that a sign of take profit activities going on in the market right now. That is for those who took advantage of this bullish move, they want to be taking some profit. So we don't know how far this retracement phase is going to go. So we have this buy zone area where we said we want to be looking for buying opportunity, probably in the form of a reversal pattern, to join the rally to the upside from here. So that's the buy zone we identified there. So I said if we want to be selling, we want to be moving our stop loss accordingly because we don't know when the second phase of that bullish momentum is going to begin. So that is that on the US oil. And if price breaks above the $86 level and does a retest of that structure, we want to be joining the rally to the upside on this one. So that is that on the US oil. Then we went on to talk about the US tech. And on the US tech, hold on a second. So on the US tech, personally, I'm expecting a bullish momentum on the US tech. I told you I'm already in a trade here after citing this engulfing candle that started this week. We had this engulfing candle starting this week, and we saw multiple rejection of this area. And I said if price breaks out of that structure, I want to be joining the rally to the upside, and that is exactly what happened. So I joined right above the $10,750 level, and kudos to those who took advantage of this move right around this area. So what we want to be doing is to move our stop loss. If you're already on the trade, move your stop loss to break even area, and let's see how price action relate to the structure. However, for those who are not part of this trade yet and you're thinking of joining the US tech rally, the first thing I did here was to identify a temporary bullish trend line after connecting the series of higher lows here. So we had this low here, and then we had this low at the beginning of the week. So what we want to be seeing is price probably respecting that bullish trend line one more time. Then we want to be adding more position to our existing trade at a rejection of this level, or probably price will come back again to do a retest of the $10,750 level, after which we look out for patterns on lower time frame that will be supporting a trend continuation to the upside. And I'm tending towards a bullish momentum here on the GBP, on the US tech, and the reason simply because we are within a very strong buy zone that we identified on the daily time frame. However, if at any point in time price breaks down that bullish trend line in such a way that we have an engulfing candle taking us right out of the structure, then we want to be seeing that as a bearish move. But even though we are seeing as a bearish move, we don't want to get too excited, as we want to be patient enough to wait for price to give us further confirmation, either in the form of a retest of the $10,750 level, or probably the bullish trend line here, after which we look out for patterns on lower time frame to join the decline to the downside. So this is how we intend to trade the US tech. But at the moment, we are in a bullish momentum right now. Move your stop loss to break even right now, and then let's see if price is going to retest that bullish trend line. Then we could add more position to our existing trade. Then we went on to talk about the XAUUSD, which is the gold, and I told you I'm already in this trade at this point after noticing how price action has been rejecting the $1,645 level since the later part of last week. So we had this multiple rejection of this level for quite multiple rejections since last week, and that gave us a clue that there is a tendency of a bullish momentum at this point. So what I did here is to notice what has been happening since the beginning of the week. So we saw our price started on a bullish note, rejected this level at the $1,650 area, came back to do a retest of structure, and then we saw this move to the upside. So I took advantage of that move right above the $1,650 level, and price action is in our favor at this point in time. Move your stop loss to break even to protect your position against any sudden pullback at this point in time. So anywhere right above the $1,750 area looks more promising to be buying the XAUUSD at this point. However, if during the New York session we have a further breakout of the $1,660 level, which is the purple line here, which also shares a confluence with the bearish trend line that has been guiding our bearish momentum since last week. If we have that breakout happen, then we want to be seeing that as a bullish signal. And if we have a retest to structure, we want to be adding more position to our existing trade, as we have the $1,680 area as our take profit target in the meantime. If you can see, you can look at this closely, we can see that the $1,680 area also shares a confluence with a strong bearish trend line we identified on the daily time frame. Let me show you the bearish trend line. So we have the daily time frame on the screen right now. So we have this bearish trend line here. So going back to the 1 hour time frame, we can see that the $1,680 level is close to the $1,600 close to the bearish trend line. So we want to see how price action is going to relate to that structure here before we now make another decision of either buying or selling the gold. So if we have multiple rejection here, then we want to be looking to join the decline to the downside. And if we have a breakout of the key level, which also lines up with the bearish trend line, then we want to be looking at a retest to structure to add more position to our existing trade on the XAUUSD. Now that we have this buy position running, we cannot ignore the possibility that we could be having a bearish momentum at this point. And the fact that we have this multiple rejection of this demand zone area here, we need to be very mindful of how we're going to be selling the XAUUSD. So what I have suggested here is that I want to see price break down that level at the $1,645 area, hereby taking out all the buy position within this area. Then if that happens, then I want to be patient enough to wait for price to come back and do a retest of the structure, after which I want to be looking out for patterns on lower time frame before I join the decline. So what this simply means is that I'm not going to be selling the XAUUSD unless price breaks down the $1,645 level significantly well before I want to be joining the decline to the downside on the XAUUSD. So that is that on the XAUUSD. Then we went on to talk about the GBPUSD, where I told you I already took advantage of a bullish momentum here right above the 1.12500 level. And if we look at the current structure we have here, we have this bearish bullish trend line which has been guiding our action since last week trading session. So we can see how price has consistently respected that temporary bullish trend line we were able to identify here to push price to the upside. So for this week, we have two parameters that's going to be guiding our action. The first one is this bullish trend line, as we want to continue to see price rally right above that bullish trend line to be comfortable in our buy position on this one. Then we also have this level at the 1.12500 level, as anywhere above this level is looking promising to buy the GBPUSD. So if you are not yet in this trade, well, I'll be advising that if we have a breakout of the 1.1300 level, which was our neckline for last week, then a retest to structure, which also lines up with the bullish trend line here, should give us another confirmation to add position to this trade. And if you are not in this trade yet, it's an opportunity for you to join the rally to the upside. So I have identified the 1.140 level as our take profit target, and you know why that is because of how this area has been a very strong selling niche for participants in this market in the last 2 weeks. And remember, 3 weeks ago we had the breakdown of this level, we had a retest of the structure, and price is still trading right below that level. So because of this, we want to be mindful of how we trade this. So we have our take profit target around that area. We want to see how price action is going to relate to the structure before we make a continued decision. If we have reversal pattern here, we might be thinking of selling, and if we have a breakout of that structure, then a retest of structure might be giving us a confirmation to add more position to our existing trade on the GBPUSD. Now that the key bullish trend line here is serving as our yardstick, if at any point in time we see a breakdown of that bullish trend line, which also lines up with the 1.12500 level, then we want to be seeing that as a bearish signal, and then that means that sellers are still very strong in this market. Remember that below the 1.1400 level is where price has been trading in the last 3 weeks now. We can see that's the 1.1400 level. Price has been trading right below that 1.1400 level since in the last 3 weeks now. So if we have a breakdown of that temporary bullish trend line that we just identified here on the 1 hour time frame, then definitely that's a signal that the sellers are still very strong in this market. So a retest to structure should be giving us the confirmation to join the decline to the downside on the GBPUSD. Then we went on to talk about the USDJPY, where we have been enjoying a bullish momentum in the last 1 week now. So we joined the move right here, and price has been trading to the upside. We had the first position here. We had the second position at a breakout retest of the structure at the 147 Japanese yen, and price has continued to rally to the upside. So we have a total of, let me see, I think about we have the first position running with 300 pips, over 300 pips, and the second position running with over 190 pips, which is close to 500 pips thereabout. So at the beginning of the week, we saw that as soon as price got into the 148.850 level, we've started witnessing resistance. Price has been rejecting that level for some time now since the beginning of the week, and we can see that price is within a channel between the 148.850 and the 148.450 Japanese yen level. So it's a channel we have already, and whenever we sight a channel like this from a technical standpoint, we are going to be patient enough to wait for participants to give us that signal that is a breakout or breakdown of that channel. So if we have a breakout of the 148.850, then a retest of structure should give us contact confirmation to join the rally to the upside. So we could add one more position to our existing trade, and if you are not still in this trade, this could be another opportunity the market is presenting to join the rally. However, if at any point in time we sight a breakdown of the 148.450 area, a retest of structure is likely going to be sending price into either this bullish trend line here to push price to the upside, or it could come as far as the bullish trend line here, which also lines up with the 145, 147 Japanese yen level before we start seeing the second wave of that bullish momentum that started last week. So let's be mindful of the structure and let's get ourselves prepared to take advantage of that move when it finally happens. So I told you that I will continue to extend my TP accordingly as price action moves in my favor. And I also told you that you move your stop loss to the below the 148.400 area, at least in the meantime, to protect our position against any sudden pullback that might happen from this point in the market. So that is that on the USDJPY, and then we went on to talk about the EURUSD, where patience is required here. As we can see, price is still right within the channel since the beginning of the week, right within the 0.97500 area and the 0.97200 area. So we have been seeing this consolidation phase here, emphasizing the indecision in this market. And when we check the economic calendar, there is no high priority event that is likely going to be a catalyst for price movement on this one. So we want to rely on our technical skills, monitor price movement, and use whatever we identify here to make an informed decision. So what we are going to be doing here is to remain patient, wait for a signal to happen, either in the form of a breakdown of the structure, after which a retest of that structure will give us a confirmation to join the decline to the downside, and with a take profit target somewhere around the demand zone here. So we don't know how price is going to relate to the structure, so we have our demand zone here because we might see a bullish momentum come right out of that area. Then if we have a breakout of the 0.97500 area, that is price breaks above this level, then that's probably going to be a bullish signal. And remember, we are not getting too excited at the sight of such a signal. We want to be patient enough to wait for price action to give us further confirmation in the form of a retest to structure, and then we want to join the rally to the upside. So that's how we intend to trade the Euro USD for this week. Then we ended the day with the Dogecoin, and the Dogecoin, we are looking for bullish momentum here. So after identifying the structure we saw on the daily time frame, we saw a very strong demand zone at around the where is that, around the 0.0550 level. We saw a demand zone which has been holding price action since the month of June. So this is more or less a sign that buyers are very strong around this area, and to sell, I'm not going to be selling unless a breakdown of this demand zone happens. That will take quite a lot of patience for you to wait for that to happen, and then a retest to structure will be giving us a confirmation to join the decline. But I don't think that's going to be happening anytime soon, so we have to scale down to the 1 hour time frame, where we were able to identify a flat channel after this impulsive move to the upside. So we saw this impulsive move to the upside, and since price got into the 0.0600 level, we saw how price has been caught within a channel right within the 0.0600 level and the 0.0580 level. And what we said here is that we want to be patient enough for a breakout or breakdown of this channel to happen to give us a signal that of where price will be heading. So what we are going to be doing here is to be patient enough to wait for a breakout. If a breakout happens, then that's a bullish signal. Remember, we are not getting too excited when that signal happens. We want to wait for confirmations to happen in the form of a retest of the structure, after which we want to be joining the rally to the upside. And if a breakdown of this channel happens and then we have a retest to structure, we want to be selling with a take profit target right within the demand zone we identified on the daily time frame. So at the moment, we have a situation where price appears to be breaking out of the 0.0600 level, but we don't know how far this candle is going to go. This candle is just 32 minutes old at this point, so we wait for this candle to close. If it is an engulfing candle taking price right out of the 0.0600 level, then definitely we want to be waiting for price action to come back, do a retest of the structure. Then we look out for opportunities on lower time frame that supports a trend continuation to the upside to join the potential rally. So that is that on the Dogecoin, and I hope I made myself very clear. So today we were able to treat how many pairs today? 1, 2, 3, 4, 5, 6, 7 good pairs we were able to treat for today, and I was able to share with you all the possible scenarios that is likely going to be happening on this pair, so that we don't get ourselves caught up in a dilemma when price action finally gives us that signal. And remember, we don't want to get too excited whenever we have a signal. That is, if we have an engulfing candle taking us right out of the current structure in the form of a bearish engulfing candle or a bullish engulfing candle, we don't want to get too excited. We want to calm down, remain patient, and wait for price action to give us further confirmation, which is likely going to come in the form of a retest of that structure. Then we look out for patterns on lower time frame that support the trend continuation to whatever direction the signal is giving us. So we need to be very patient. And on this note, I wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, and let's come here together and get ourselves prepared for the New York session as usual. Thank you very much for being around with me. I really appreciate. And on this note, bye bye.